This question is based on the IMA Statement of Ethical Professional Practice, focusing on ethical conflict resolution, confidentiality, and escalation of serious misconduct, whistleblowing. Key facts. Andrew Babbitt, a management accountant, discovers that his company is illegally disposing hazardous waste in a residential landfill. This poses a serious public safety risk and potential legal violation. He reports the issue to his supervisor, who instructs him to ignore it. Because of the seriousness, Babbitt consults an attorney and then notifies appropriate authorities. The key issue is whether breaking confidentiality is justified when internal resolution fails and public harm is involved. Under the IMA ethical framework, confidentiality is important, but it is not absolute. It may be overridden when there is clear legal violation or imminent harm to public interest, especially after internal reporting channels have been exhausted. Babbitt's actions were appropriate as an immediate action. Incorrect. He should first attempt internal resolution, which he did. However, external reporting is not typically the first step, but a subsequent escalation step. B. Babbitt's actions were inappropriate because they violated the confidentiality standard. Incorrect. While confidentiality is important, it does not apply when there is illegal activity and public harm. Ethical rules allow disclosure in such extreme cases. C. Babbitt's actions were appropriate only if his attorney indicated that there was a clear violation of the law. Correct answer. Consulting legal counsel ensures that disclosure is justified and protects against unnecessary breach of confidentiality. If legal violation exists, reporting to authorities is ethically appropriate. D. Babbitt's actions were inappropriate because they involved insubordination. Incorrect. Ethical responsibility overrides obedience to a supervisor when illegal and harmful actions are involved. Correct answer. C. Babbitt's actions were appropriate only if his attorney indicated that there was a clear violation of the law. This question focuses on the Foreign Corrupt Practices Act, FCPA, compliance requirements, especially the internal accounting controls component. The FCPA requires public companies to maintain adequate internal controls to prevent bribery, corruption, and improper financial reporting. Key compliance expectations include maintaining reliable internal accounting control systems ensuring accurate documentation and record-keeping regular monitoring and evaluation of controls. The question asks for the accept option, meaning we must identify the step that is not required as part of an FCPA compliance program. So we are separating legal compliance requirements from optional managerial practices. An authorized and properly signed agreement that it will abide by the Act. While companies must comply with the FCPA, a formal signed agreement is not a required element of the compliance system itself. However, companies often adopt policies or certifications, but this is not mandated as a control requirement. This is the correct answer. Exception. B. Documentation of the corporation's existing internal accounting control systems. This is required under FCPA. Companies must maintain proper documentation of controls. C. A cost/benefit analysis of the controls and the risks that are being minimized. While not explicitly required by law, this is a standard good governance practice in designing internal controls and is consistent with control evaluation principles. D. A system of quality checks to evaluate the internal accounting control system. This is required. Continuous monitoring and evaluation of controls is a core FCPA expectation. Correct answer. An authorized and properly signed agreement that it will abide by the Act. This question tests knowledge of the core objective of the Foreign Corrupt Practices Act, FCPA, of 1977. The key phrase is principal purpose, which means we must identify the main reason the law was enacted, not secondary provisions. Key points about the FCPA. It was enacted by the U.S. Congress in 1977. IT targets corrupt business practices in international operations. IT specifically focuses on illegal payments or bribery of foreign government officials by U.S. companies. IT also includes provisions related to internal accounting controls and record-keeping, but these are secondary to the anti-bribery purpose. So, the question is fundamentally about identifying the anti-bribery intent of the law. It discourages unethical behavior by foreigners employed by U.S. firms. Incorrect. The FCPA does not focus on controlling foreign employees' ethics. It targets U.S. firms' actions toward foreign officials to b. Promote the mandates issued by the United Nations with regard to global trade. Incorrect. The FCPA is a U.S. domestic law, not driven by UN trade mandates. C. Prevent the bribery of foreign officials by U.S. firms seeking to do business overseas. Correct answer. The central purpose of the FCPA is to prohibit U.S. companies from engaging in bribery of foreign government officials to obtain or retain business. D. Require mandatory documentation of the evaluation of internal controls by independent auditors. Incorrect. While internal control provisions exist in the FCPA, audit documentation is not its primary purpose. Correct answer. C. Prevent the bribery of foreign officials by U.S. firms seeking to do business overseas.